So the numbers are in. So let's see how the economy is doing at the moment. Today is 5th of September 2019. Welcome to the show.
Weak wages, cautious consumers, and tepid growth. That's the reality for an economy in the worst shape since the depths of the global financial crisis. Figures released today reveal the economy is growing at the slowest rate in a decade. There's no sign that interest rate or tax cuts are working yet. Here's finance reporter.
Before we proceed further, however, I want to read you one of the comments on one of my videos from a viewer. Movie Clump is the viewer. So the comment is: the Australian economy is like a plane with two engines. One engine is real estate, the other is mining. Even if one goes bad, the plane can still fly on the other, as it has since the last recession. But if both engines fail, the plane crashes rather, and all is lost because the housing bubble greed machine has left Australia with the economic complexity of Zimbabwe. I thought it was actually funny. There is another engine type thing, but it's probably tied more to the property, and that is population Ponzi. So what are the numbers actually?
The numbers showed people are saving less to make ends meet. Spending by households like Faye's, which account for more than half the economy, was weak. It would normally be double this contribution. Also well below par was flat business investment and housing construction, which was a significant drag on growth. The economy was kept afloat by trade thanks to booming commodity exports like iron ore and government spending on health and infrastructure. It was a torrid time for the construction sector, reeling from the election, faulty buildings, tighter lending standards and falling property prices. Buyers were running scared.
A lack of preparedness to actually commit to any long-term commitments, and in many cases a willingness to actually walk away from commitments. So we did see cancellations rise, and we did see some default rises too.
It's symptomatic of an economy travelling in the wrong direction.
Let's see what the experts have to say about that.
Over the last few quarters, we have basically had growth slowing and slowing and slowing.
Wow, thank you for the insight. For the last few quarters, we've had the economy slowing, slowing, and slowing, basically. That, by the way, is the only time you're going to hear me say basically. Okay, what about the politicians? Specifically, the party in power right now. So let's see what they have to say. What numbers are they looking at? Let's see.
The Australian economy has shown remarkable resilience, and these numbers are a repudiation of all those who have sought to talk down the Australian economy.
Slowing and slowing and slowing.
The Australian economy has shown remarkable resilience.
Let's see how good old friend property is doing at the moment.
Well, building construction is very much the canary in the economic coal mine. Approvals for new homes are down, while apartments have crashed nearly 20% amid a crisis of confidence over shoddy building. And while spring is lifting prices in some areas, pain continues in others.
Not so good then.
Prices in the largest capitals peaked this time 2 years ago. After falls of up to 15%, they're climbing again.
We've seen 3 months now where values have increased in Sydney and Melbourne. We're starting to see values push higher.
Oh, before I forget, I want to pick up on that point that Sydney and Melbourne have gone up. So August, if you saw my last video, August 2019, Sydney's gone up by 1.6%, Melbourne 1.4%. And I made a point in my last video that I think in addition to Chinese money coming in, obviously not as much as it used to, there is a Hong Kong money coming in. We all know what sort of turmoil the Hong Kong is at the moment. They got all sorts of financial currency issues, not to mention the political issues with the mainland China. Well, I have another video to recommend from our good friends at Real Vision Finance. Kyle Bass explains the Chinese currency crisis as an investment opportunity. Probably the title is not exactly what he's talking about, as much as he's mentioning Hong Kong so much more than China. It is actually all about Hong Kong. I'll include the link to this video in the description, but I'm not going to spoil it for you to say that there are a lot of affluent Hong Kong families who are selling up and moving to places like London, anywhere in the United States, and my guess is only anecdotally and only a speculation to Australia. And once they come to Australia, you think they want to go to regional towns or buy some sort of country properties, farms. At this stage, I don't think so. It's easy to, again, speculate that they would want to come to Sydney, number 1, Melbourne, number 2. And there it is, Sydney 1.6 up, Melbourne 1.4% up for August 2019. No offense to Darwin, Perth or Adelaide, but if you are well off, which you would have to be if you own property in Hong Kong and you want to get the heck out of there, you're not going to go to Darwin, Perth or Adelaide, hence they're down. And by the way, don't get me wrong, I do not think that Hong Kongese coming to Sydney and Melbourne and buying up properties is going to turn the property around. They'll probably buy a few high-end properties, harbour side, in example in Sydney. Like this one actually, they got sold just last Saturday at the auction. Look at that, $5,055,000. Neutral Bay, 4-bedroom, 2 parking, 2 bath. This is, ladies and gentlemen, a property that cost somebody over $5 million. And in a minute, I'm going to try and calculate what the stamp duty for this was. That's assuming that it's not a foreign buyer, which means that it's like a lower figure of what's possibly the actual stamp duty that the person paid, especially if they've come from Hong Kong. I'm actually surprised that they disclosed the selling price, being such a huge, eye-watering number. Let's have a look. Right, need the water. Not quite the water. Very nice. Can't complain, Neutral Bay. It's actually my neighborhood. I'm just up the hill, actually. And no, I'm not bragging because mine is far from something like this. All right, enough of that. As promised, stamp duty calculator. New South Wales, $5,055,000 New South Wales residence. Investment doesn't seem to make any difference. If I change that, no. Established new, same thing. At these numbers, government don't care. They know whoever you are, you got plenty. First home buyer, $5 million, I don't think so. If we say no, the number is still the same if I hit calculate. So the stamp duty that this person had to pay was just under $300,000. So $293,840. This is just to transfer from somebody's name to somebody else's name. It's paperwork type thing. And the government of New South Wales would like this person to hand over $293,840 just to have it put in their name. Insane, if you ask me.
Building approvals from July show a 3.3% drop in new homes, seasonally adjusted, and a crushing 18.4% slump in approvals for apartments. There's a rise in the failure of developments to settle apartments bought off the plan. That's hitting future demand as industry scrambles for a national solution to fix the rules and restore confidence. It's likely that we're a long way from getting to the bottom of the quality issues in some of the buildings that have sprung up in our capital cities. Martin North says many apartment owners are aware of structural defects but don't want to raise the alarm and hurt their investment.
Just taking a look at one particular stock that got belted today, CSR, of course, so tapped into that housing market. It was off by 7%. Was that on the back of a downgrade?
Yeah, so JP Morgan downgraded its target price from 380 to 350 and sort of downgraded to an underweight position. Unsurprisingly, talking about the weakness in the construction market and the decline in approvals for building. So saying that will have a fairly significant impact on its bricks and pavers saving and other business units. It was they've really cut earnings, not that much, 4% over the forecast period, but they're now running around about 12% below consensus earnings. So unsurprising that the downgrade came, but a pretty strong share price reaction today.
And of course, that ties into what we've seen done to Adelaide, Brighton, Boral, etc. So it's all part of the theme.
Yes.
And the wisest words for last?
And the towering problem for the construction industry. The scandal's scaring off buyers.
Well, if you want to buy a unit, buy an old unit, 20, 30, 40 years old. Don't buy a new one.
I know that's almost impossible, but I'll try and be one wiser. I understand that the question would have been asked, what unit would you buy? Probably, and Martin said, buy an older unit as opposed to the new unit if you have to buy it. My wisdom says, and I've said it many times before, not financial advice, don't buy a unit. It's not yours. It's only the air inside that unit that you're buying. The walls are part of Body Corporate. It's Strata. You can do very little to that unit without asking Strata's approval. And another problem is whatever comes up in the building that may or may not need rectification, somehow the tenants will be scared into, or the owners will be scared into agreeing to go ahead with that sort of work, and then you end up having to pay thousands of dollars, if not tens of thousands of dollars, to rectify something that may or may not need rectification. Having said that, buildings, large residential units and buildings tend to have a lot more problems than the houses. For some reason, must be the complexity, the car parks, the waterproofing, the fireproofing and cladding. So what I'm trying to say, and I've pretty much said it again, is just don't buy a unit of any kind. If you can't buy a house, just rent anything, a unit, a house, whatever suits you close to work, and enjoy your life. I know it's not always as simple as that, but you know what? It really is. Just think about it. Or it can be if you make it. All right, enough of that. Thank you all for watching. I'm going to wrap it up here and we'll talk again soon.